How does the great state of Rhode Island tax retirees? I can hear you asking out there in YouTube land. Rhode Island for retirees. Well, let's dive right into it and find out. And welcome again to the Heritage Wealth Planning YouTube channel, my friends, the place you come to find out how retirees are taxed in various states, such as Rhode Island. And we also cover the other 49 as well. So don't forget to click the links in the notes. That way you can see what the other states do in case you're thinking about going to Rhode Island or coming from Rhode Island to relocate to someplace else. As always, if you like the content we have here on Heritage Wealth Planning YouTube channel, just click the button right over there that says subscribe. Don't forget to subscribe and then be notified if you click the little bell for notification. That way you'll be made aware of the future content we have. We try to do about 5 videos a week. And so you want to keep up to date. So hit the subscribe button and then hit notification as well. All right, let's dive right into the great state of Rhode Island, where was it Newport, where the Navy is, if I'm not mistaken. I think my granddad was in Newport, Rhode Island or something like that. They're Navy. I was in the Army. Navy runs deep in our family, but I was a black sheep. I went in the Army. My brother even went in the Marine Corps, but the Army paid the most for college. So that's where I went. All right, so let's see here. Rhode Island, that tiny little state right there. As we do, we start with Kiplingers. And let's see what Kiplingers says about the great state of Rhode Island. Ooh, not tax friendly. I want to see that, but well, I'm surprised they haven't said this. All right, so the Kiplingers has all these funny little quips. So I'll share one they could have said here just for a second. The Ocean State has been tough on retirees, but the state has been making moves in recent years to become friendlier. You know what they should have said there? The Ocean State has been tough on retirees, but the state has been making waves. Get it? Waves, ocean. Come on, Kiplingers, you got to get your quips on here. Sometimes they have wonderful quips, but this time they did not. The Ocean State has taxed virtually all sources of retirement income, including pension income. But as of 2016, the income thresholds increased for when Social Security benefits are taxed, which will lessen the tax burden for some retirees. Starting in 2017, a new state income tax exemption for retirees took effect. Up to the first $15,000 of income will be exempt for retirees who meet certain income thresholds. I wonder what those income thresholds are. Let's find out. Although it once had one of the highest tax rates in the nation, Rhode Island has dropped its top income tax from 9.9 to 5.9. Wow. Low-income seniors are eligible for modest property tax relief from a state circuit breaker program as well. Sales tax is a flat 7% and the no local taxes on sales. So that's good. And clothing and footwear footwear. Man, those shoe lobbyists, they are the best lobbyists that there is. Okay, well, not hatwear. But anyway, clothing and footwear with an item price of $250 or less are exempt. Why not groceries? All right, so income tax, well, that's not bad. I mean, low of 3.75 on up to $60,000 taxable income. So remember, if you got to take your taxable income, if you're married filing jointly over the age of 65, you add $26,600 to that to get your gross income. Because remember, the first $26,600 is tax free. So $60,000 plus $26,000 is $86,000. It's going to be $87,100 before you're moved above into the 5.99 or above the 3.75 income tax rate. Effective income rate is basically 4% for individuals in a foreign quarter for joint. Social Security doesn't tax Social Security benefits for single filers with up to $80,000 of AGI. That's good. And joint filers with $100,000 of AGI. So again, AGI, like we just talked about, so that's pretty good. I'll take that. Railroad benefits are exempt, of course. All Social Security benefits fall below that threshold we just talked about are tax free. The first $15,000 of other retirement income, including private public pensions, is exempt from state taxes for retirees who have reached full retirement age, 66 or 67 if you're born in 1960 or beyond, and have an income of up to $80,000 for single and $100,000 for joint. And I'm going to assume that is gross income because that's where that is too. So basically, if you're married filing jointly, and you have gross income of less than $100,000, your Social Security is tax free, and you get $15,000 per. I don't know if it's per person, but you basically get a pretty significant exemption on retirement income as well. It doesn't say per person, so I'm not sure if that's tax return per person. That's fantastic. That's not so bad, my friends. So if you're at $85,000 let's see, 50, and I'm just going to assume, let's say 80,000, 50 comes from Social Security and 30,000 comes from your IRA. I'm going to assume that's per head, not per tax return. You don't pay any taxes to Rhode Island. We'll see what the smart asset calculator says here. Ooh, the property tax where they get you. The median home value in Rhode Island is $236,000 with an average property or median property tax at $3,800. So that's pretty high. That's almost 2% there. Now, see if they have an exemption. Homeowners 65 and older who earn $30,000 or less can get a credit of up to $305. Cities or towns may offer another credit as well. To qualify, yeah, see, that's not going to do much. Vehicle tax is 7%. And inheritance, yeah, of course. And Rhode Island has an estate tax with an exclusion level that's indexed to inflation. The 2017 threshold is 1.5 million. And it ranges from a low of 0.8 to 16%. All right, so no inheritance tax. What the exclusion level means is that on if your estate is 1.51 or lower, there's no estate tax. If it's above that, you're going to pay an estate tax rate, tax. There's just no getting around. Estate tax is probably how we should say that. Now, what is included in your estate is everything you own, which I'm telling you includes your life insurance. Everyone thinks life insurance is not included, and they could not be further from the truth. Life insurance, my friends, is included in your estate if you own it. And if you own it, you own it. It says, who's the owner? Josh Scanlon is the owner. Josh Scanlon is the payor. My wife, Charlotte, is the beneficiary. I own it, and I'm the payor. That means I'm the person who pays the premiums. When I die, goes my spouse. Generally speaking, I'd say the vast majority of the time, that won't be subject to an estate tax because what's called the unlimited spousal exemption. I die, gets my spouse, she gets everything tax-free. That completely makes sense. If I die, and then she gets all that money, and then she dies, and it goes to my kids, well, if it's more than 1.5 million, then they're looking at an estate tax without question. So let's see what Tax Foundation says about the Great State of Rhode Island. Here we go. Learn more. Let's see. Tax Foundation again looks at the big picture, not just for retirees. They're looking at everything, and so that's a little bit of conflicting advice from what the Kiplinger says, but let's just see what they say. 5.99 is the top income tax rate. The total tax burden is almost 11%, which puts Rhode Island in the top 10 for most tax burdensome in the union. Tax Freedom Day in Rhode Island is April 28th, which puts them in the top 10 for the least tax, the latest for tax freedom. So the most tax burdensome are there as well. Sales tax, we already talked about that. Now the states, look at this. This is exactly what I'm talking about. The state sales tax is number 2 in the union at 7%. When you factor in the local in-state tax, they're in basically smack dab in the middle there. So it's quite a big range there from state to local and state, and then the actual amount of money they collect on sales tax is only $900 per capita per person, which puts them in the bottom third. So it's not. I mean, even though it's high, it's not that high, and then the actual dollars you spend on sales tax is not nearly as high as 34 of the other states. Property tax where they get you. Well, 1.53 is puts them in the top 10 for most burdensome, I should say, 1.53, and their per capita collection is $2,300, which puts them the rank number 7 for highest taxes that they receive from property tax. So that's typical in the Northeast. Higher home values, usually higher tax percentages, and definitely higher actual amount of money that's going from your pocket to theirs. Actually, I did not see sales tax in terms of, they tax cigarettes 4.25 a pack. Wow. So both cigarettes and gas are taxed pretty high in the great state of Rhode Island. All right, so let's see what asset.com says about Rhode Island. And they were down here on the not tax friendly. It's weird because Maine was in there too, and I didn't think Maine was nearly as bad as Smart Asset did. So, all right, so let's just start with, they already got us in there, 50,000 Social Security, 50,000 retirement income. We'd pay $3,700 to the state of Rhode Island in taxes. Well, they got that for $125,000. Must be a pen. Yeah, okay. Let's get rid of that. All right, so let's do this again. So they got 50,000 of retirement income, 50,000 Social Security income. We're going to pay $2,100 in taxes to the great state of Rhode Island. If you scroll down here, that's about a third what we pay to the feds. So that's, that's not horrific, but it's certainly more so than, paying $1,000. But still, that's not nearly as bad as what one would think, given that Rhode Island has been notorious for being a high tax state. Let's just do this real quick. This is going to drop it significantly, I think. Yeah. So look at that. Because of the exclusions they give you, you essentially pay nothing. I don't know if that 13,000 or was it 15,000? I guess, or was it 13? I can't remember. I don't know if that's per head or per tax return. So this looks like it's per tax return. Was it was 13,000 or 15,000? For just a second, mi amigos, it's 15,000. So it looks like that's. I'm going to try something real quick. Let's do this. Let's just do 50,000, and we'll see. That should be 0. Yeah. Okay. All right, so it looks like it's per tax return. You get a $15,000 exemption. All right, but either way, if you have $50,000 in income, gross income in Rhode Island, of which 25 is Social Security and 25 was IRA, you only pay $100 in taxes. That's, I'm not going to argue with that. It's not too shabby. Certainly not a horrible tax burden. And look at that, 50,000 income, you're only paying $375 to Uncle Sam and $100 to the state. That's not so bad. Let's see. I do want to go down here, see if they say anything more about the exemptions. A small state in the union, we know that. These are all great states. Reasons to consider Rhode Island retirement, but the Ocean State retirement taxes might cause one to think twice. Unlike most states, Rhode Island provides no special income tax or exemptions for retirement income. That's just not true, according to Kiplingers. I'm going to pause here because I am confused. Kiplinger says something different than smart asset. So I'm going to pause and do some research, and I'll be right back. Whoa, my friends. So I'm very glad I looked at the Rhode Island tax code thing here, and I'll put a link in the show notes because watch this. It explicitly excludes IRAs from the exemption of that 15,000 retirement exemption. In fact, they even give us an example here with old Liam. They say, talk about a couple of people here. My phone just clicked on. That's kind of creepy. Let's see. They say, let me show you Liam if I can find him. Let's go to Control F, Liam. All right. There we go. Right here, Liam. When Liam retired from a corporation, he chose to transfer everything from his retirement savings plan to an IRA. At around the time he turned 70, he began taking required minimum distributions. He reports the withdrawal as IRA distributions on the appropriate line of his U.S. Form 1040. Liam is not eligible for the Rhode Island's new tax break because the tax break does not apply to IRA withdrawals. This is the case even if Liam clears all the other requirement hurdles for Rhode Island's new tax break. As described elsewhere in this publication, the example assumes that Liam has no income from pensions, annuities, 401ks. He may be eligible for a separate Rhode Island tax break involving Social Security benefits. So, my friends, so Smart Asset didn't say anything about this. So Kiplinger said a little bit, but it said it wrong. It said IRAs are included in the exemption. That's absolutely not correct. And also I found out too, if I can find it, that is per head, not per tax return. And so bear with me while I scroll down here just a little bit, because there was a couple. Let's see, right? Was it Matt and Mia or Mia? Nope. It was not Jacob. It was down here just a little bit. I'll show you explicitly. Yeah, right here. Michael and Charlotte. Let's see. Michael and Charlotte qualified for the tax break involving pension and or annuity because they passed all the tests. Each of them is of full retirement age. Their income falls below $100,000 and they're married, filing jointly. Michael and Charlotte have a total of $45,000 in federally taxable pension and annuity income. Under the new Rhode Island tax modification for pension and annuity income, the $15,000 applies per person. All right, so in this example, $15,000 of Michael's military retirement pay and $15,000 of Charlotte's 401k IRA or 401k distribution count for purposes of the tax break. Thus, $30,000 of the couple's pension and annuity income will be tax-free for Rhode Island purposes. So we saw two things here. One, IRAs are not included. Do not roll an IRA over if you're going to live in Rhode Island. Or a 401k, 403b, TSP, a pension. Do not roll it over to an IRA if you're going to live in Rhode Island, just like Maryland. Two, On top of that, it is a per head. So Charlotte and Michael each get $15,000 tax free on top of half their Social Security benefits, as long as their adjusted gross income is less than $100,000. So that's good. That's good stuff, man. I'm glad we looked at this. And again, I'll put this to the show notes. So Smart Asset was wrong. Kiplingers was wrong across the board. It's just wrong there. But at the end of the day, Rhode Island is actually quite favorable from an income tax perspective. And sales tax is moderate, but from an income tax perspective, if you're under AGI of $100,000 and have AGI of $100,000, if you have some Social Security and some distributions from 401ks, you'd be all right. And the whole point is don't have a mortgage. If you don't have a mortgage, you can find that very quickly that you're under $100,000. All right, my friends, if you find this helpful, what I always say, that little red button, hit subscribe. Don't forget to hit the notification bell to be notified of future content. Comments are always welcome. Maybe you got boots on the ground that I'm not aware of. Obviously, some of the tools that we're using here have leave some to be desired. So if you got boots on the ground and experience, I'd love to hear it. Then lastly, don't forget to thumbs up. That's what I meant to say. If more interested, go to heritagewealthplanning.com, heritagewealthplanning.com for the YouTube, or I guess we're on YouTube for the podcast, the blog post. They have a calculator on there as well of retirement income, how much you need. And I think you'll find that helpful and beneficial to you as well. We'll see you next time on the Heritage Wealth Planning YouTube channel. Thanks, folks.